Assalamualaikum warahmatullahi wabarakatuh. Good morning, the Honorable Mrs. Syahrul Nija Kamarul Arifin as a lecturer in Financial Management, and good morning to all my friends whom I am proud of. At this meeting, I refreshed my group and will explain the result of the task of analyzing financial statement that we have done, namely is the Chong Motor Holdings BHD and the DRB Hicom Berhad. Previously, I would like to introduce myself. My name is Arief Syaiful Rahman, and these are colleges who have contributed to the work of this task. The first being is Danel Husna Audia, and then Deliza Rahmadona Andera, Muhammad Irchamsyah, and the last is Risti Ika Pertiwi. Before going to the discussion, I will first tell you the background of the Chong Motor Holding BHD. That is Chong Motor Holding Berhad, also known as TCMH Group or simply Chong Motor, is a Malaysia-based multinational company active in the assembly, manufacture, distribution, and sale of automobiles. But it's best known as a vehicle franchise. Nissan in Malaysia. The company was founded in 1957 by two Malaysian businessmen. There is Tan Yuen Poh and Tan Kim Hor. Chong Motor assemblies a subsidiary of the TCMH Group, started its car assembly operation in 1976 at its factory in Segambut, Kuala Lumpur. TCMH Group then built the second and third factories in Slough, Selangor in 2007 and in Da Nang, Vietnam from 2013. The TCMH Group also hold franchise rights for UD Truck, Renault, and Photon Motor in Malaysia, as well as for Nissan vehicle in Vietnam, Cambodia, Laos, and Myanmar. TCMH also has subsidiaries that are active in property ownership and financial service. That is the Chong Motor background. And then this is a background from the RB Hicom. The RB Hicom is the majority shareholder of Malaysia National Car Company, Proton with China Zhejiang Geely Holding Group as the other shareholder since an equity sale in 2017. The group also owns national motorcycle company Modenas with Japanese two-wheeler Giant Kawasaki as a partner. The RB Hicom assemblies cars in Malaysia for Tata Motor, Honda, Isuzu, Mercedes-Benz, and Volkswagen, with expansion plan. Apart from automotive, the RB Hicom's core business focus in the service sector, like postal, banking, vehicle and inspection, and property and infrastructure. This is done through several companies such as Pos Malaysia, Bank Muamalat, and Puspakom. The group also has a significant presence in the defense industry. Through the RV Hicom Defense Technologies, it design, develop, manufacture, and supplies armor and logistic vehicle for military and homeland security use. It supplies mainly to the Malaysia government. And then there is comparative analysis. In this discussion, we will compare the various aspect ratio of the two companies. For the first aspect is the current ratio. We can look in this table and graphic. According to the data comparison, Chong has a higher percentage of current ratio than the RV, but Chong consistently decreases every year and it's inversely proportional with the RV. The RV always had to increase the chart of the ratio even if there is an increase moment the RV try to maintain it to not decrease more. So Tanchong may have a higher current ratio but they cannot maintain it and the capability to pay the liabilities is always lower every year. The RV doesn't have a higher nominal current ratio than Tanchong, but the RV can maintain their capability to pay the liabilities always better every year, and when it increases they maintain it to keep stagnant and not decrease any further. So with the same industry background of this company, we think the RV is more effective to maintain the company by paying the liabilities. The second is quick ratio. We can look in this table and graphic. From the quick ratio in these two companies, we can see that Chong has a higher percentage of quick ratio, which indicates how capable the company is to pay their liabilities with liquid assets. And the RV has a lower percentage of it, but if we pay attention to the chart, the RV always has a significant increase every year, but in 2019 they had decreased and grow to increase higher in 2020. We assume that the RV has a good performance to develop their capability to manage their liquid asset to fulfill their obligation to pay the liabilities, even though they are in a decreasing position. So also in Tanchong, they can increase the quick ratio from 2016 to 2017, and after that it decreased for 2 years and come back to increase position. It's a fluctuative chart and we can see that Tanchong has a good development of their quick ratio, but it's not as significant as the RV. But Tanchong still has a good management of their liquid asset to pay the liabilities. Okay, for the next is networking capital. We can look from table and graphic according to the data above. We can assume that both Tanchong Motor Holding and the RB Hicom are not in a good net working capital condition. For the latest year, that is in 2020, the RB Hicom is in a really bad condition because it's in minus state, which mean the company will not be able to pay their short-term debt in the following year, while Tanchong still has a higher chance of paying short-term debt than the RB Hicom, even though the NWC keeps decreasing. And then that is for financial leverage. From the data above, we can see that Tanchong had a significant increase in their debt to asset ratio. For DAR, we all know lower percentage is better because DAR has a function to show how capable the company is to manage their assets and how much the asset is paid by the debt. Tanchong has a good cycle percentage of the DAR, and the RB has a lower percentage and also fluctuate chart. But in general, we assume that the RB has more balance between the assets and the debt than Tanchong, but these two companies in the same industry are still in a good range about their balancing asset and debt. Next, and then this is debt equity ratio. From debt equity ratio, or we can say DER, DER. From the DER comparison about the RB and Tanchong, we can see that Tanchong started the balancing of the debt and company equities with a good percentage, but in 2019 to 2020, it increased so high, but it's still in a good percentage. Even in the RB, there has a little changing on the percentage, but it's still higher than Tanchong. So with a simple analysis, we can assume that Tanchong has more capability to manage their debt to fund their company. But again, the debt is not always bad. Surely it can be used to develop the company, but the company should use it wisely. And remember to not take too much to take a debt to fund the company, and also to make it still worth it to the investor as a debtor. And then this is inventory turnover from two companies. We can look in 2016, inventory turnover for the RB Hicom was 6.24, higher than Tanchong, which only had 2.67. This indicates that the RB Hicom had a good management to control their inventory, so they can transform inventory into sales faster as compare with Tanchong. From 2017 until 2020, Tanchong inventory turnover is still below the RB Hicom. It can be concluded that the RB Hicom is more effective in using their inventories to generate sales. And then total asset turnover. We can look basically from 2016 to 2020. Chong total asset turnover was consistently higher than the RB. It showed that Chong used all of their resource or total asset to generate sales better than the RB Hicom. And then this is return on asset. According to the return of asset data, the RB Hicom saw a greater chance of making a return to investor than Tanchong Motor Holdings, even though in 2016 the RB Hicom started a minus point. It kept on increasing throughout the following 4 years. While Tanchong latest ROA in 2020 dropped to minus state that show no chance of making a profit and cannot return from total asset to investor. And then this is return on equity. According on the data in this presentation, we can look the return on equity of Hicom. The RB has the highest ratio value of 6.87 in 2020, while ROE of Tanchong dropped to its lowest value of ROE in 2020. It showed that Hicom the RB has a good movement in equity management rather than Tanchong. It also showed that the RB Hicom has a greater chance of returning profit to investor from its total equity. Okay, in conclusion, this analysis of the financial performance of the Tanchong Motor Holding BHD and the RB Hicom Berhad companies is knowledge of how we analyze the company's financial performance based on the existing annual report and can be utilized properly by the company's internal and external needs, such as investor. Based on the analysis we have made in the case study of the financial performance of Tanchong Motor Holdings BSD and DRB Hicom Berhad, we can see how the condition of the company is seen from its financial performance report and help investors to decide in which company they will invest in terms of the minimum risks that exist. They get maximum profit. And from the aspect that have been explained, we think that both companies have a 4 index for investing in these companies because there are still many ratios that do not meet the existing normal ratio standard. Okay, maybe that's the explanation that I can convey. Please forgive me if there are shortcomings, and I say thank you to the Honorable Madam Syahrul Nija Kamaru Arifin, and thank you also to all of my friends. Assalamualaikum warahmatullahi wabarakatuh. Good morning.